What's up, guys? Welcome back to Everyday Money. Now, I was getting ready to cut my grass the other day, and I had my Spotify going in my headphones. It's one of the few subscriptions that I have, and had that running, getting ready to go, and I hear it go quiet, and I get a notification on my phone. And it's from one of the YouTubers that I subscribe to, and it had the big, bold, capital letters, "The stock market is crashing." And I was like, because crashing means that you're losing double-digit gains in a very short period of time. That is the definition of it. There's not really any given percentage. It's a big deal. I mean, crashes, we're talking about 1929, we're talking about 2008 and Black Monday and the coronavirus pandemic shutdowns. These are examples of crashes. So I take a moment before I get started because cutting the grass is like, it's my time. I'm zoned out and I can just focus on that, and I'm not worried about anything else, just cutting grass. But I said, let me look at the stock market here real quick and just see what's going on, because I have a significant amount of money tied up in the stock market and total market funds, and I want to check on it. So I get into Google and I type in S&P 500 gingerly and hit go, and I get the results, and it says that the market this day was down 2%. 2%. That's not a big deal really in the grand scheme of things. If you got a lot of money, that could end up being a lot of money, but 2% means that 98% of it is still left. Now, the day prior, it was also down 1 and some change, I believe, but over the course of 2 days, we were looking at like 3 or 4%. And this brings me to a point of mine that just really grinds my gears, and that is sensationalism, either in mainstream media, in just average conversation, and especially on YouTube. And I know why people do it, because it gets clicks, and it's saying that the stock market is going to crash or is crashing is a huge generator of clicks and views. So let's take a look at this particular day of when they said the stock market was crashing, and just compare that to what the definition of a crash is from what the definition of a pullback or a correction is, and look at some other historical things where we can see that a 2% crash isn't or 2% downturn, I should say, is not a crash. All right, so let's go to the Google here and see what we have going on. Today, what are we on? We're on May 14th, 2021. We're sitting here up 1.2%. We're within spitting distance of record highs within a day or so of when everyone was saying that the market was crashing. So this is today's chart, but let's take it out to about a month. Now, here is the peak. This was a recent record high of 42.32 and 0.6. And this little trough here is where the market was crashing between these 2 days. And actually, I believe it was just this day alone where it went down 2.4% where the market was crashing. But from here to here, we're down 4.01%. Now, if you've seen any of my other videos where we talk about market crashes and what constitutes a market crash or a pullback or whatever, a pullback is about 5% loss. And so this doesn't even constitute a pullback, much less a crash. And the biggest thing to remember really in a market crash is say that the market is crashing. There's no way that you can tell that until it's already over, because even if it does go down steeply for 1 day or 2 days, unless it goes down 20, 30, 40% in 1 day, you really can't call it a crash until it has gone from a peak to a valley and then started to come up, and you can say that was the crash, or if you're just in it for a month and it's still going down, 30 or 40% like it did in 2008, and we're going to take a look at that here in a second, then you can pretty confidently say it's a crash. But a 1 day decline of 2% or so does not constitute a crash by any means. Now, if we come out here to the year to date, so from January to that peak there, we're looking at 14.37%, which on an average basis for the S&P 500, the market as a whole, is almost 1.5 years worth of gain, being a 10% average rate of return. And even if you looked at that from the beginning of the year to the bottom of that trough, that's still 9.79% gain, which is, again, that 10% gain that you're going to see in any given year. Back to this monthly thing. After this, gigantic market crash,
I'm picking up your sarcasm.
Well, I should hope so, because I'm laying it on pretty thick.
we have come up on almost a 0.5% in 2 days here. About 2 days. And so this is what I'm saying. You have to have a certain time frame for someone to say that it is a market crash versus any other thing like a pullback or a correction. But let's go out a few years and look at, actually let's go out, I think 5 years. 5 years here. Let's look at a legit market crash. Now, this is when the coronavirus pandemic first really started to look like it was going to be really bad. We started locking down things. We shut down the entire United States economy in order to try to contain the spread of this virus. Now, this was a real market crash. And if you look here, and it's hard to get right on the peak of this with this 5-year chart, it looks like we're at about 33.8016. We can click on there and get down to the low here where we lost 31.81% between February 14th and March 20th of 2020. That can be considered a market crash. But again, it was very short-lived, and we were right back about even somewhere around August 14th to 15th, and then it's been on a tear since then. Now, if we look back even farther, you can get back here to the 2008 credit housing bubble crash, and it looks like it peaked somewhere around here in 2007. And now this crash was about 55.49 from where I have these points selected right here. And that took from October 26th to 2007. And again, I just are getting these live right now, and so they may not be the exact peaks and troughs. And then to March 6, 2009, that's quite a few months to get a crash. And so we can look back now and confidently say that is a market crash. But when we're in the heat of the moment, on a day-to-day basis, it may not have looked like a crash until there were several days of things piling up and people started losing their jobs, started losing their houses, and it was very obvious that this was a market crash. And so it's pretty easy to see that those 1 or 2 days of down numbers, even with 1 or 2% per day, doesn't even come close to constituting a market crash. And this is why I say for anyone that's invested in any kind of market that isn't just trading or speculating, that you have to have a very long-term view of things, because there's going to be ups and downs consistently in any given market, housing, stocks, cryptocurrencies, anything like that. And some markets have wider fluctuations than others, and that you can't make decisions based on one day's results. In addition to that, the sensationalism of these things is also, it just kind of drives me nuts and really goes against everything that we say on this channel, where you have to take a long-term view and just ride those waves up and down. Keep in mind, guys, anytime, at any day in the market, a crash could start, and you have to either be willing and ready to ride that out for the long term, or have your stop orders in place so that you can protect the gains that you have and, not panic sell and sell into a loss and lock in that loss. Remember, guys, that over time, the stock market always goes up. It always has, and unless there is some sort of major shift in our economy or some sort of major natural disaster or nuclear war, it will continue to go up over time, as it always has, even during the darkest days of any recession or depression or stock market crash. History has shown us that over time, the markets will always recover all of their losses and continue to accelerate upwards essentially forever. So if you like this video, be sure to hit that thumbs up button for me. If you're not subscribed to my channel yet, Go ahead and hit that subscribe button down below to grow your wealth, increase your success, put you on the road to financial freedom, and also get the minimum amount of sensational videos with clickbaity titles, maybe other than this one. So we'll see how this one does with the title that I plan on putting on it. I appreciate you guys watching today, and I'll see you in the next one.